Oh, hey there. Yeah, welcome to Too Long It Didn't Read Finance Edition, where I'll be talking about some personal finance and trading with a little bit of a TLDR version up front. So stick around, like, subscribe, comment, and here we go. We did it. We did it, boys. So, week 4 update here. We're finally back in the green with a monster week thanks to earnings. And, I mean, sticking to the plan is definitely part of the thing. It's not fun, it's not sexy, but just when you're having down times, when you're down right over almost a little over 10% in the account for the first 3 weeks of the year. But and it's easier at this point now. I just feel more confident because I've got years of experience. I can look back at my notes in my journal and go, okay, you were right 70% of the time. Just stick it out. You had a bad run the first couple times, no big deal. So we're going to get into this week's trades, what happened, and then I will also break out two earnings plays just to again show you what it is that I'm doing. One a winner and one a loser, and just kind of how I adjust or use those. But ultimately, a huge week. We made almost 5 grand this week, so account is back in the green, and I'll show you more on that later. We'll get to the journal software just because it's a nice crisp view to see how we did last week. So first up, we've got 57 trades last week, so quite busy. There's a lot of earnings going on. But also we had some adjustments. We had some things fall off because the market was moving. And but yeah, so we'll just get right into it. I'm going to skip over most of the earnings. I'll mention them, but I'm not going to really break down into them. If you want me to break down more into those, let me know. But by all means, there's too many of them this week. I think there was 20 or 30 of them alone last week that we played. But yeah, here we go. So I had first off a QQQ position. I was rolling. I have a long, what's called a poor man's covered call on right now. I have a deep in the money 150s, I believe, QQQ. They're called leaps. They're long-term extension options. And I bought those back in March of last year, right after the dip. And so I'm holding on to those, and I've been selling covered calls against them on a monthly basis to ultimately pay for them, so that whatever is left is all profit. And I usually like to keep those about 30 days out. So this one was getting a little close. It was getting about 15 days or so, and so I rolled it out for a little credit, 34 bucks. Not a big deal. I did do 2 of them, but ultimately I don't want that long haul assigned. I don't want to pay capital gains, short-term capital gains tax on it. So I'm purposely waiting this out. You'll see it's the 230s. If you're looking right now, the Qs are at like 315. So it's deep in the money. It's really against me, but I made 50 or 60% on that position in total. So really, I'm just any extra credit I can get is just cherry on top, and I'm just waiting until after March so I can get long-term gains on the big winners, the 150 calls that I've had. So this is just a normal maintenance thing. I'm just rolling these out another couple weeks for a little bit of credit. Again, just adding the sprinkles on top of the Sunday for that big QQQ position I've had since the drop back in March. OIH, this was a maintenance play, so I had this covered, or oh, this was the broken, the play I was trying to do. So OIH is an iron condor that I put on from Option Alpha, a service that I actually learned to trade with, and they have a little service that sends me alerts. So I was testing them out. This is a maintenance play. It's been going against me, so I was rolling down the calls for just a little bit more credit because it had fallen against me. So I'm bringing down, right? The stock price was here. I had a piece here and a piece here. It's an iron condor, both sides. And the stock's fallen, so I brought in the call side with me for a little bit more credit, ultimately bringing my max loss down and my profitability or probability of being correct and making at least some money in this up. So we'll get to more on that because we actually end up closing OIH out this week. But yeah, so let's see, we want. Oh, and I didn't have the date set, but that's all right. So we also had an IBM trade. So last week, IBM had earnings. They fell pretty far. I think that was a little over exaggerated. So one of my favorite things to do is go in and sell, assuming the rebound occurs. So I sold the put spread, meaning I'm thinking it's going to go up. And so far it has. It's sitting at about 120, I think, right now. So that one's doing pretty well. We should be able to close that in a couple more days. Beyond Meat closed out on its own because as a put spread, it finally just rose high enough I do set orders to close out on their own if a certain target profit is hit. So that's what happened here. That worked like a charm. I closed out the call side of SRPT. As I mentioned last week, I was trying something new. I was trying to roll an entire iron condor out, and it didn't work out. I just couldn't get the credit on the put side. So I sold these initially a couple weeks further out, and since I couldn't move the whole thing, I just closed these out for I think I made $1 or $2 on them, nothing crazy. And then the puts are still sitting, waiting to expire this week because they are not looking like they're going to come back. So that one's going to be a full loss on that. But not a full loss, right? So we had a 5 point spread. I took in a bunch of credit, so it's really only 200, maybe $300. So it's not terrible, but obviously that one just fell off a cliff thanks to their. That's why you got to be careful around biopharmas and drug companies. So Amazon, we closed out. We were in the money. We had some good profit on it. This just had so many adjustments because Amazon was moving back and forth pretty good. So I just decided to reset. So I closed it out for a small win, and I haven't reset it yet, but I will put because they had earnings this week tonight actually. But so once the earnings are done, then I'll go ahead and reset this as one of my core positions. We already talked about the OIH trade that I maintenance. It was a maintenance trade, just rolling some down for some extra credit. DFS, so we rolled these out. DFS was another earnings play last week that didn't do well, and I think it was a little over exaggerated as well. So I sold puts, expecting it to rebound. This was a maintenance play because I needed a little more time, or I wanted more time, because they came down even further and were testing my 90 strike. Right now they're sitting at about 88. So ideally, we want them to continue to go up. We've got plenty of time now. We got out till March 19th, so that shouldn't be a trouble. But that was just a maintenance trade there. Closed out our Zoom. We had a small profit on this. Again, similar to Amazon, we just had a lot of adjustments because it was all over the place. We moved the calls down, and then it went up, and so then we moved the puts up. And so once I noticed we, had a narrow range there, just 375 to 395, when we started out with over 100 points of a range. We were still in the money, so I just took the money what I could. We'll reset that later if it comes to it, but it's not a core position, so we just closed it out, took the money, and ran. XLNX and DHI, those were earnings plays. So we're going to skip those. But same thing with all of these. I'm selling iron flies is what it's called. So I'm selling an at the money put and an at the money call, and then I'm buying wings for protection based on the standard the expected move that the math and the Black-Scholes model and Bjerkson Stensland, those are the two option pricing models. They come out with a number based on volatility and a myriad of other things. And based on that number, that's what I'm buying the wings for. So in ZL or XL and X, I sold the 145s. That was where the last price roughly was trading at near the close. And then we had roughly, what is that, 8 points to either side. So that's how those orders go. SE, we rolled it, so SE dropped a little bit and we were lucky enough to get a roll out for a couple more weeks for just $1, but we did get paid for it. That's what we always want to do. We never want to roll and pay for it. We want to get paid for it. So we got lucky there with a dollar roll for a couple extra weeks. SE is unfortunately back up now to about 240, so it's not looking good again, but we got some more time, so plenty of time. AMD was earnings, 5 was earnings, Boeing earnings, Hess was earnings. PDD, a trade I've had on for a couple weeks now, finally closed on its own. So that was great. It was a short call. It fell pretty hard, and so that just closed itself. That was great. Same with Carvana. Just finally fell far enough from grace from that 330 number to close out for a profit. Nice play there. And you can look back, but it's roughly like I usually try to get this is a 10-point spread. So per 500 or 5-point spreads, I like to get at least 15% of that number in credit, so $75. So since these were 10-point spreads, I took in roughly probably $1.50, $1.60, and then I'm closing them out for 50. So I got to keep $100 of that. And maybe we'll do another video where we're breaking out the probability of profit and my return on capital versus return on investment, because it's not because they're different numbers, and $100 doesn't seem like much, but considering I only risked 1,000, and not even 1,000, it's 1,000 minus the credit, so 850. The return on capital can really be a rather large number. Closing out some of the earnings plays, we had the Q. This was the roll I talked about earlier. Again, I messed up the date when we first started, but this was the roll of the covered call, just for additional cherries on top. Apple had earnings, Cree earnings, all these were earnings. Facebook now, Skyworks, Black and Decker, no, Stanley Black and Decker. Yeah, I think that's what it is. Again, I don't I don't pay a lot of attention to the actual companies and what they do. I just run the scans and the data, the math, the expected moves, and I'd see if it's worth it or not. So ADS, Mastercard, Whirlpool, all earnings. Is big earnings day on the 27th. That was Wednesday. This is closing out all the earnings. Again, we did really well on earnings this week, so we'll show a little bit more into the depths or the details of that. The next day we had nothing but earnings. This was Skyworks, Caterpillar, Team, which is Allison. Team, it's something. I don't. And then Eli Lilly, biopharma company. I try to normally stay away from these, but some of them are usually a bit smoother than others. And this was a good volatility play. High volatility, which usually means I've got a better shot at being right. The higher the number is, because you can think of volatility as the exaggeration number. So if it's higher, it's even more exaggerated than usual. And in the market, when you're selling options, you want more exaggeration, because typically the exaggeration never comes, the item never comes to pass, or at least not as bad as it was going to be, or as good as it was going to be. And so that just benefits you as an option seller, because it also increases premium, the money you're getting for selling these options, which is good. The more money you get, the less you have at risk, the higher your potential chance to make a dollar on it. All good things. This is closing out all of those, and then we ended with a rut. So the market did fall towards the end of last week. So our core positions in SPY and rut that we put on just at the end of last week, we're getting tested. So we rolled those out for a small credit because they were right at our limits, at our 270 for rut and at 370 or so for the SPY. So we got a little credit, but we bought a couple more weeks. So we got paid to hold these positions for a couple more weeks, and of course it's done well. The market's ripped back ever since, so these positions are sitting nicely. And we'll come down. We'll minimize this real quick. So yeah, so profit so far of $956. So if you'll see, back then our net lick on last Friday was $39,400. It's about what we started with the year. So how am I up $1,000? Well, I have we've taken some deposits or withdrawals. I mean, so we've taken about $1,000 since the. Oh my lord, this is gross. There we go. So we got about $1,000, 200, 200, 200, 200, and two. So $1,000 has gone out. It's in a checking account that I just spit out, just to get used to having money flow out. So that's where that $1,000 in profit is. And to wrap up, we'll spin over. Oh, I'm sorry. I wanted to show you some earnings. So first we have Apple, because that was a good winner. So, all right, we got the 15-minute chart. This is back on earnings here. Let's switch to the 5 real quick. So we sold about the 140s. That was where we were, because this is about 15 minutes before the close where I like to start placing these trades. It was about where the price was. I like to do the round number, so it was not on 140, but it was close enough. I believe it was about a 10-point move, and then all this craziness happens overnight because earnings came out. Obviously, they didn't like it too much. It was going down, and then I'm sure everyone loves Apple, so like, hey, it's a buying opportunity, so they bought it back. Whatever the reason, but it opens almost 139.50. Like, that's perfect. That's what we want to happen. We want the event to happen. All the volatility gets sucked out of it. The crush. There's a lot less volatility, and then to open somewhere near our middle strikes, our 140. That's gravy. So we were able to close out this for a nice $600 profit. Let's see, we had um, with Apple here we go. So we did two of these for $790, so $1,600 was our credit that we received. So we're trying to hold on to as much of that as we can. And we closed, and then we had the rest at risk, which was about $12, $11. So only about $800 at risk. We closed out the next day for a little under $5, so we made about three-ish, so almost $600 on $800 risked, right? So that's a great trade, absolute money. Love when that happens. And then of course we have a loser. So we had MasterCard that just absolutely ripped it on earnings. So we had like the 315s, I think we did. And obviously they beat earnings, they beat sales, they absolutely smashed it. Just see this takes off in the morning pre-market, right up to our max loss, I believe. Yeah, we sold the 312 and a halves, and our top side was 327. So 327, right? So it's right there. So it should be a max loss. However, this wasn't on a Friday, so we had an extra day, and we still had some. The implied volatility wasn't completely gone yet, especially with that big of a move, which is why I just absolutely love this style of trading, is because you just get so much um, help with the trade, right? If it's going against you, on paper without any of the craziness of volatility, that should be a max loss. And so we took, I think, $10 in. Yeah, we took in 10. It was a 15-point spread, so we should have lost a grand right off the open. However, because of the craziness and volatility right at the open, we were able to close out for 11, not 15. So we only lost about $200 instead of 1,000. So, and that's just because the volatility, especially in the morning, right at the open, it's always crazy. A lot of people day trade the open because of that craziness. And I honestly haven't seen anyone over long-term periods consistently profitable with that. But again, this was a losing trade, and it should have been a much bigger loss. But because of the craziness, because of the way I trade with the iron flies and high implied volatility, we were able to get out for just $200 loss instead of 1,000. So big deal there. And lastly, we're going to show you the journal software. So I set it up. We just got last week's, and so we made almost 5 grand. So it's just a huge week. Love it. Love to see that kind of stuff. Obviously, this doesn't happen often because it's not crazy earnings weeks every week, but about 4 times a year, right? Once a quarter. There's about 2 weeks where all the major companies go. You got your Apples, Amazons, Facebooks, Chipotle's, Boeing's, all that stuff in there. So it gets pretty hectic. I think Thursday last week I had 12 trades I was trying to close out in the morning, so it can get a little crazy, but obviously it can be worth it. So we had an 84% win rate. So 84% of the time I was right. And then we had our average winner, average loser. We did 26 positions. And then lastly, I just want to show you if we filter it, our earnings trades alone were 4,300, 4,400 of that 4,800, 4,900. So obviously earnings was big. We have an 81% win rate with that. Um, Mostly iron flies. Again, selling the short, the put, and the call at the same strike. But some of them are too big to do an iron fly just because of the risk. I like to keep it to 1,000 max loss. And so when I can't get that on some of the higher price stocks, um, I end up doing an iron condor, which is just further out. The wings, they're not right on top of each other. They're further out. And as long as it stays in the middle, Tesla was a great example of that last week. ServiceNow was another one. And those just don't have as much profit potential, but usually have a higher percentage chance of being right because they're just further out. It's easier. The next morning, the ball crush is gone. They don't have a narrow window of like right at the same price. They're way out here. So as long as it's anywhere in this range, it's a max profit. It's a win. So as you see, 100% win rate on those. That's not always the case because obviously if earnings takes off, like that Boeing trade or a Mastercard trade, they could be a max loss immediately. So it's a lot more um, not bipolar, a lot more like hard lined. Like it's one or the other, black or white. It's not a gray where the iron fly is, where I can kind of massage that profit or loss number a little bit more. Iron condor is yeah, that's kind of all or nothing. 78% chance right on the iron condors, and then the rest of it was from those trades that we closed out. So we closed out the Zoom, that was the iron condor for a small win. The short calls on I believe it was Carvana and PDD for a nice little 100, 150, 112, and then Beyond Meat for 200. That was a big one because again, it was just over exaggerated. We sold some puts on it, it took off, made a nice profit there. So that's it for this week. Absolutely, again, love it. This is one of the high points, so I've definitely been relishing in it all week. And on to the next. So thanks again.